Good afternoon, everyone, and welcome to our first SA Stock Picks of the year, powered by the JSE. My name is Voyoli. I'm the Director of Marketing and Corporate Affairs at the JSE, and I will be your host for today's session. To all our online audience, the loyal audience, welcome back. And to our first-time viewers, it is great to have you on board, and I guarantee you, you are in great hands. We have a panel of 4 investment experts today who will share with you the stocks they believe are worth considering as part of your investment portfolio. As a recap on how it works, each of the panel members have about 7 minutes to share with us their 3 shares or any other financial instruments that are available on the JSE that they recommend that you buy at this moment. They will tell you why they recommend you buy these picks. And you will also have an opportunity to ask questions by posting them on the comments box, and we'll try to get through as many as possible. Now, this is the 15th SA Stock Picks brought to you by the JSE, and the panel members who join us today are regulars on the program, and it's time to meet them. First, we've got Simon Brown, who is no stranger to our various JSE platforms and is the director and founder of Just One Lab. Welcome, Simon. We have Tamanga, the CEO of Shiloh Capital, who joined us in session 14 last November. Welcome back, Tamanga. Petri Redelinghuys, the founder of Herenya Capital Advisors, joining us for the 3rd time today. Let me get this right. It's Petri Redelinghuys, ladies and gentlemen. And Anthony Clark, another regular of SA Stock Picks and an expert on small caps. And Anthony is an independent analyst at Small Talk Daily Research. And welcome to you all, and thank you for your time today. So let's get straight into it. And Simon, we will start with you. Please tell us about your 3 stock picks for today.
Thanks, Voya. So I'm going to start with my really small one, which is a Calgary M3. This was a stock that I hold way back in the day. I think back 2010-ish or so, and it had a phenomenal run. But then, truthfully, it kind of lost its way. And in fact, if you speak to Lucas Lartigan, the CEO, he would tell you that they had an existential moment there where they almost went bankrupt. But they've pulled it back incredibly well. They had a trading update coming out just recently for the period ending February. They're looking at about 184 cents minimum per share in terms of headline earnings. It's on a share that's trading around the 450, 480 level. It is, of course, a small cap, which means wide spreads. Be careful with liquidity in that regard. But the trading update was strong. It puts it on a PE of around 2.5. It's a price to book of around 0.4, although that book value is perhaps a little bit skewed. Quite simply, part of the trick is that a lot of that book value is land, and they've got the land which they're going to use in future. But the challenge is, can they really get the cash for the land? That becomes the big issue there. They simply build houses. And what we know about South Africa, of the many challenges that we have in our country, is we have a chronic housing shortage. And what they do is they can do from low income, in fact, down as far as government grants, and they can do higher up. They can do houses in the north of 1 million. And in fact, they've got some areas where they can do north of 2 or even 3 million. But as the circumstances change, they shift where they're putting their current building. And they've been focusing on those lower income houses. They've also got a lot more efficiencies coming through in terms of just how they build, saving on space, stairways, fire escapes and the like, without compromising safety, but helping in terms of the costing of the actual construction. So that also fairly significant as well. The pre-close update with the company, they are worried about election years. They're worried about places being invaded and the like. Those certainly are potential risks for the year ahead. What they do is they build structures, but they don't put the tops on the structures. They found that tends to keep away potential invaders. So that's one of the things that they've flagged for. But it's on an immensely cheap valuation. They've been doing significant share buybacks at current levels. The question is, would they pay a dividend? They will consider it, but at this point in time, at the valuation on the share, you're probably getting better money from share buybacks. So Calgary M3, my first one coming through. Next on my list is Mr. Price, another I hold all 3 in this list today. Mr. Price, obviously, predominantly a clothing retailer in South Africa. They've also got their at-home brand. A couple of things I really like here. One, just from a technical picture, The chart is looking attractive after that trading update from February. That saw it break through some resistance, pullback. Now it's carrying on significantly higher. The trading update talks around 90% of their business as being cash sales. I think that's important. And the reason why I think it's important is because we've got a consumer which is in a better place this year than in previous years, but not in a great place. And what I mean by that, inflation is coming down, but interest rates are still high. We anticipate rate cuts later this year. The consensus seems to be that we'll probably get about 1% of rate cuts over the year, but it still puts credit under pressure. Hence, 90% of Mr. Price is cash sales, so credit less of an issue. I also start to think that after a tough couple of years for consumers, what we're going to see is folks really wanting to, the wardrobe needs upgrading. They need to go and spend a little bit. And I think Mr. Price is going to capture that. They've got mind share in terms of being a value proposition for individuals. They are incredibly well liked. In the trading update, they make the statement that they think they've been picking up market share as much as 1.5% in the clothing retail space. They had challenges. Trading update end of December, most notably ports. From what I can tell, anecdotal evidence, quite simply, I go into Vessel Finder and I count the number of ships sitting outside the Durban harbour, ditto for the Cape Town harbour. That seems to have significantly improved from what we were seeing in December, and Portnet is saying the same. They're saying that conditions are markedly better. So that should certainly help them for the next couple of weeks. Results for them are due 30 May. And I just feel that this isn't, the SA consumer is not going to be in an absolutely booming space, not by any stretch. But it is, as I said, going to be a better year. And I think Mr. Price is one of those. If we look at the forward PE, it's around 13 times, 13.5. This is a standard deviation or more below the 10-year PE average. Now, I think that PE has been overly exaggerated a lot over time, but certainly a move up to the average and perhaps even a little bit higher is entirely possible. I don't see any short-term move to massive back to those all-time highs, but I think around the 170s looking attractive. And then what for me, which is a weird stock, is AngloGold Ashanti. And it's weird because prior to the pandemic, I'd never held gold or a gold miner in my life. But the pandemic changed things. We have gold hitting repeated closing highs over the last couple of days, trading around 2,130. We saw from the World Gold Council, central bankers were buying last year. Fun fact, all those AI chips that NVIDIA is selling, they've all got some gold in them. Not a lot, but a little bit of gold there as well. The story for gold is that there is still some uncertainty out there in global markets. That uncertainty has conflicts in Europe and the Middle East, elections in 70 plus countries, representing over half of global GDP. Interest rates, inflation has come down, but is it going to continue to the target, 2% in Europe and in the US? When does the ECB, the BOE, the MPC, the Federal Reserve, when do they start cutting rates? Is it going to be sooner or later? Initially it was March, now it's looking like mid-year. Could that even get delayed? Could it get pushed into next year? There's a lot around the recovery which is spooking people. And then of course the recession, which a year ago, 85% probability of recession in the US, and right now doesn't even look close. Jobs data is still strong. But that uncertainty's pushed gold, and it's pushed the gold miners. And I had a quick look this morning. I look at the GLD ETF, which is gold in ZAR. It's up over 3 years. It's up some 50-odd%, 55. Yet Harmony and Goldfields, 110% each. Pan-African, 45. AngloGold Ashanti, 35. DRD, only 9% up. This excludes dividends, but I think we can start seeing some of the laggers really start to move. Goldfields and Harmonies will carry on going. And there's great potential here. AngloGold Ashanti, I like it. I hold it as one of the sort of top gold miners in the world. Very little B-grade assets, very little high-cost assets, no seriously deep mines as we see from some of the others. So those are my picks. Colgra M3, Mr. Price, AngloGold Ashanti. Well, thank you. Back to you.
Thank you very much, Simon. And ladies and gentlemen, you've heard from Simon. We have Mr. Price, which is the most popular stock on SA Stock Picks, featuring for the 7th time today. And I guess what is Simon's go-to stock? As he said, he's held it since 2010, which is CalGrow, which you also selected the last time he was here in session 12. And last but not least, Anglo Gold Ashanti, which incidentally was Petri's choice 6 months ago. I guess, Simon, the question is, how far is this gold run going to go? How long do you think the curve will continue in the positive direction?
Well, it's a great question with an almost impossible answer. There's some folks out there who will tell you $5,000, $10,000, maybe in time. I don't see that, not even necessarily in my lifetime. But just from a simple, we had a bit of a channel that formed from around the highs of 2020. And if we extend that up, I think a 2,400 or 2,500 is very possible on the gold price. And of course, we get the leverage effect. That's sort of 15% up from where we are now. That drops to the bottom line on the miners, and their earnings will then go significantly higher. And of course, any rand weakness helps at the same time. So I think 2,500 in gold is not impossible. And it's crazy. I've never been a gold bull, but suddenly there is a story for gold out there and an opportunity. And I like things that are going higher. I like things that are making all-time highs.
Great. Thank you, Simon. And for the new investors, how would the exchange rate, the South African exchange rate to the US dollar, ultimately affect the share price for Anglo Gold?
That's a great point, because Anglo Gold, of course, I mean, they're not domiciled offshore. They still trade on the JSE, but they're reporting in dollars, and they're selling gold in dollars. They don't sell gold in any other currency. It is sold in dollars. So their operations are in dollars. And let's say they report an increase, and I don't know what the numbers are, but they go from $1 earning to $1.10 earning. That's nice. It's a 10% increase. But in South Africa, we look at those earnings in ZAR, and our dividend will get paid in ZAR. And if we've seen a weakness in the currency over that period, it'll actually enhance that return. So if we've got a 10% increase in their earnings, and we've had a 10% weakness in the currency over the period, we effectively get a 20% uplift in the price there. So the Rand, it can cut both ways. Rand strength takes some shine off. We saw Monday when the Rand was up at 1920 and gold had closed above 2100. We saw a fair bit of activity coming through there. So the Rand does help if it's weakening, and it hinders if it's moving stronger.
Wonderful. So the Rand depreciating means better returns in terms of Anglo Ashanti, Anglo Gold Ashanti. Thank you very much, Simon. Just a reminder to the audience to please post your questions in the comments box, and I will attend to them shortly. Petri, I want to ask you why you didn't select Anglo Gold Ashanti like you did the last time, but I'm more interested in your picks for today. So please, can you share your three? Petri, you're on mute.
Sorry about that. I'm here to pick stocks, not figure out technology. Firstly, thank you for hosting us today. And I think Simon's touched on a couple of very good points with regards to the gold price. I too am quite bullish about the gold price, and we'll get into that in just a second. First off, I think I'll start in order of lowest conviction to highest conviction stock picks. So the first one that I'll be chatting about today is Hulamin, the aluminium manufacturer or producer, after which we'll chat a little bit about Barloworld, and then Pan-African Resources, so kind of saving the most bullish or the best for last. So starting with Hulamin, I think if you look at the share price chart, you'll see that it has been a one-way trip for this stock down since around 2007. So people don't really want to own the stock very much. To be frank, though, they've made the best out of a very bad situation. I think that they've been struggling with a lot of, let's call it South Africa risk, inconsistent electricity supply, inconsistent water supply. The steel manufacturing business in South Africa has been under some pressure. We've actually recently seen some intervention from government to try and save some of the steel manufacturers. So hopefully there'll be a little bit of intervention to step in to save, or at least assist Hulamin as well. However, they have been doing some things, I think, that count in their favor. They've spent quite a bit of money on what they sort of deemed as a simplification project, where essentially what they're doing is shutting down some plants for products that are not very profitable, cutting some product lines, and changing up their product mix to really focus on the higher margin products. Obviously, rolled aluminium and other aluminium products is mostly what they do. So to showcase that resilience, for example, We look at the EBITDA number that was recently reported, down at 7%, but free cash flow from operations was up something like 503%. They reported 272 million rands worth of profit. So they've shown their ability to contain costs and kind of reinvent the wheel, if you will. And that, I think, has made them into a lot more of an agile and adaptable business, which I think, given the sort of macroeconomic context of higher commodity prices, which we think is a base case for the next, I want to say, 5 to 10 years, I think that they are well positioned. And they should do well. And also, we have a stock that's currently trading, around the 3 Rand, 4 Rand mark. It's really been absolutely hammered over the years. This was once a 35 Rand share, or 32 Rand around there. And, it's been under a huge amount of pressure. So I think that there's quite a bit of upside. Barloworld, similarly, we see also as what we deem an asymmetric opportunity. So Barloworld, as we know, is more of a diversified industrial business, operates in multiple market segments. Again, given the macro environment, we think the mining sector will perform relatively well. We've seen that Barloworld historically has had some reductions in earnings or contraction in earnings, particularly with the industrial space where they do, equipment and machinery supplies to mines. Also, the consumer segment and automotive segment has been under a little bit of recovery. We're of the opinion that the South African economy is under so much strain that at some point the Reserve Bank will have to start cutting interest rates because the sort of economy is slowing down so much. If that is the case, I think that we see quite a sharp recovery in automotive as well as consumer. And given the macroeconomic backdrop and increased interest in mining, for example, I do think that the industrial sort of segment should recover as well. And if you look historically at the price, since 2012, it's only really been under 70 Rand, I think 2 or 3 times, and it hasn't spent more than a few months down there, followed by quite a strong bounce up to about 140, 150 Rand. So I think that that's a bit of an asymmetric upside opportunity, which doesn't really come around that often. So I'd like Barloworld here for the next sort of 5 to 10 years. We might not necessarily cash the low, but under 70, I think over the long run is going to be a good price for you. Then lastly, Pan-African Resources. So obviously, I don't want to repeat too much of what Simon said, but things are looking fairly rosy for the gold price. The higher gold price helped them generate something like $27.2 million in cash, of which they paid out 18.7 million. I mean, that's a dividend yield of 5.9% at the December price. It was still a sub 4 Rand stock at the time. So assuming that sort of dividend cover ratio remains the same, I think this is going to be a big dividend payer over the years to come. They've also recently sort of announced a new project, the MTR project, will be coming online later this year. So that's going to add another 50,000 ounces of gold production, which increases the gold production by about 50%. An interesting sort of comment from their CEO was one of the primary ways to reduce your cost per ounce on an all-in sustainable production basis is to just increase the number of ounces that you produce. So this is something that they're doing relatively well. About 85% of their production is coming in at around $1,340 an ounce as their all-in sustaining cost forecast for this year. And some of it is coming from a tailings sort of retreatment facility where their cost is considerably lower, like it's like $650 an ounce, something like that. So their all-in sustaining cost is really much lower than the rest of the industry, if you will. So in that case, they are a bit of an industry leader in the terms of the lowest cost miner. They are also, I think, led by a very young, dynamic management team that are very much future orientated. So if you look, for example, they were the first mine in South Africa, or first mine at least that I know of, that has gone to the extent of building their own solar PV plant to kind of go energy independent, maybe not necessarily energy independent, but they're investing heavily into renewable energy to try and bring down their production cost over time as well. They're also doing water retreatment facilities and all that type of stuff. So I think that from a longer term perspective, this share is very well positioned. It's obviously run very hard over the last couple of days, thanks to the gold price breaking to all-time highs. So I think that if there is any weakness in the stock, it's worth buying into. And I think it's just, it's slightly higher geared to the likes of, the gold price than what something like Anglo Gold Ashanti is, which is still, a hot favorite. I just think that if you were to really compare where the asymmetric opportunity is, the smaller caps is probably going to be where you're going to find a bit more luck. Historically, I favored Jubilee over Pan-African. However, now I kind of see Jubilee Metals Group as a potential takeover target for Pan-African. It makes sense to me that Pan-African would want to go on a shopping spree to buy Jubilee. I would be supportive of a move like that. I'm not saying they are. I'm kind of hoping they're listening. It's a good idea, guys. And that is a wrap, essentially, for my 3 trade ideas. So just to recap, Hulamin, Barloworld, and Pan-African Resources.
Thank you very much, Petri. I do see that you tend to have a leaning towards mining stock in your selections. I guess my question for you is, I mean, in 2022, we had quite a huge commodities boom for South African markets. And 23 is just slightly slower. So what is your forecast for the 2024 year?
So look, I think that we have a divergence of consensus here, because what we're looking at is an inflation cycle that's almost at the end, right? So the general expectation is for interest rates to start being cut over the next, within the next sort of 6 to 9 months, right? The Fed should start cutting. Interest rates are very high. This is the general expectation. I do think that there's a few problems with that. Uncertainties and escalation of tensions in the Middle East is putting some pressure on supply chains. I think 50% of the world's trade goes through like one trade route, which might need to be expanded. If there is any sort of escalation in tension, that trade route is blocked. That's going to put higher pressure on inflation. However, the primary sort of thinking that we have at the moment, or that I have at the moment, is that we're starting to see a divergence between the West and the Eastern world. So let's call it NATO versus BRICS, right? I think that we probably start to see a contraction in the NATO economies and an expansion of the BRICS economies. So we start seeing, China, India, Russia, South Africa, and all the other BRICS economies, which ironically also produces now over 80% of the world's oil. I think that we see those countries really expand and do well and go into a growth phase, where a lot of our commodity demand is going to come from, obviously from the industrial powerhouse that is China. While the Western world, the NATO nations, North America, Europe, start to contract and maybe go through a little bit of I don't want to say a recession, but a more difficult time. So we see a growth spurt in the East and a bit of a contraction in the West is essentially what my thinking is.
Okay, great. Thank you, Petri. And with regard to Barloworld, I mean, over the years, they've been unbundling quite a few of their businesses. And lately, I think the most recent one was the automotive business with the listing of Zeda. Has that actually released value for the shareholder, or is that still to be realized?
I think we're still to see really whether or not there's going to be, massive benefit in that for the sort of investors at the moment. I mean, Zeda's share price hasn't performed all that well since unbundling. I think also, it has been a tremendously difficult economic environment for, for all of the segments within Barloworld stable, at least, particularly, consumer and automotive have been under pressure, and most recently now mining. So I think that there is maybe some time still to pass. I think once we've seen a bit of an economic recovery on our side and interest rates start cutting down, I think at that point someone like Zeda would start doing a bit better. I think the advantage that Barloworld has is that it is very, very well diversified, and primarily, I mean, just leaning on history a little bit, as I mentioned, Barloworld does not spend a lot of time below 70 Rand a share. It has done so a few times in the past, but only a few months at a time before it recovers quite sharply after that. And I think that it offers a very good, high probability entry point if you're a medium to longer term investor.
Thank you very much. So we have 3 picks from Petri. We had Pan-African Resources, Barloworld, which was last selected in March 2022 for the 3rd time coming on SA Stock Picks, and a welcome back to Hulamin, which was last selected in November 2021 at our session 5. Thank you very much, Petri. And before we move on to the next speaker, let's just see what questions have come through for Petri and Simon. I suppose the one that I can pick up right now is any comments around MTN stock? Elliot Wave from Elliott Wave analyst, says that he believes that it has bottomed up. Any comments on whether this is something to consider? Simon, maybe you want to take that one?
I think you're braver than me. I mean, I just look at a chart and see something that's falling. The problem with MTN is the devaluation of the Nigerian naira, which is half of their revenue. That was 20 to the ZAR a year ago, then it was 40, and now it's 80. Nigeria is a great market in terms of growth prospects and the like. They struggle to get cash out, and that devaluation is really significantly hurt. I was surprised that the market reacted to the trading update. I thought that would have been more in the price, but certainly it did. And it's a chart that I want to see some sort of bottoming formation before I'd want to be jumping in just yet.
Great. So proceed with caution, Elliott. All right. So we're now going to move on to Tamanga. Tamanga, welcome back. And Tamanga, you are known for selecting stocks in the education sectors. So what do you have for us today?
Yeah, I do. I think it's a good growth sector. And to kick it off, I'll start off with my first stock pick, which is Curro. Curro, as we know, is an educational stock focused on tertiary and primary and secondary education. They have a market cap of about 6.2 billion rand. They are targeting a sector which I think largely can be categorized by government failure. So the state hasn't managed to provide quality education across the board to everybody. As a result, they've stepped into that gap and started providing private school education across the board. And they've done this by acquiring or taking over operations of schools in particular areas they believe they can manage. They've continued with strong revenue growth, and they are targeting the future of education. They are targeting the view that the average South African will go over and above to ensure that their children have the best foundational education possible. As a company, they're in a healthy financial position. Although their tax and interest payments have gone up, they are still able to meet them in a very healthy manner. They are targeting to invest about 700 million in 2024 in, again, school acquisition or school takeover. The key questions will be around, can they transition from an acquisitive company to an operational excellence business where the schools are operating at a great clip? They're providing good academic results. That's going to be the key going forward. They charge quite relatively competitive school fees prices. So if the academic performance doesn't match that, they will begin to struggle over time. So the key question to ask is, are they able to convert from acquisition to operational excellence? The share has moved from about 8 Rand to about 10 Rand over the last year, which is about 31% growth. And judging from the PE of 23, there's a lot of growth that is still seen in the stock. Our view is, when we hold the stock, our view is that the share will continue to grow. The market is very, very large. There are not a lot of people willing to follow. It's a very hard industry to enter. And once you succeed in it, it becomes very hard for other people to follow. So as they go about their business, they're creating their own moat. So we think it's a good stock to buy. Our second stock pick is Afrimat. Afrimat is a minerals and mining business that came about through the merging of two businesses, two quarries businesses. And they focus on construction and industrial minerals specifically. Because of their operations, they are quite geographically spread across the country. So they've got a strong geographic locations. They're able to move their commodities around pretty easily. They don't have strong logistical concerns. They have a unique metallurgy because they are focusing on aggregate and construction and relative cement, relative equipment, and also minerals. So they've got a very, very unique part of the minerals market in that regard. And then they also have a structural cost advantage. They're open pit mining, and they're also in easily to access areas. So in terms of how they compete, they've created a great moat. They've also been very, very strong operationally. This is seen by the steady increase in their share price. So they've managed to make sure that everything they do is low cost and high value, and they use that cost advantage very well. And This can be seen through how they've managed to do a few highly successful acquisitions. So they've managed to buy and integrate well. They have a market cap of about 9.9 billion and a PE of about 13. And we feel that there's a lot of value still. The share price growth over the last year has been about 15%. My last stock pick is a rather large business, Naspers. Naspers is fundamentally based on the Tencent valuation. And we then can take a look at how they've structured their business. They've had two major issues. The first one was the Chinese regulator clamping down on their business, on Chinese conglomerates as a whole, and that's where they have a typical burden. They had a typical burden to overcome, which they seem to have successfully done. The second action was the corporate action by the Naspers board to form Process and detach from South Africa in some way or form and provide a offshore option in Process. And this corporate action muddied the waters quite significantly. Although it provided some offshore exposure, there was a lot of complications around the structuring and the buyback of shares, which was also issued. So that created a big gap. However, that gap is beginning to close. The action is proving to have some value, and we're beginning to see a path to value for the stock, especially through the buyback program. The other key issue is Tencent has also started participating in the program, in essence, buying the stock to Naspers and Process stock to sort of sanitize the trade. In essence, then Tencent is giving back cash to Process and Naspers shareholders. And as a result of that, making the path to value more clearer. Tencent itself is trading at a low PE and making it a cheaper stock. It also has assets it can unbundle that will also continue to provide value to its holding company. So I think Naspers is at this point a good buy given the path to value. So those are my three stock picks.
Thank you very much, Tamanga. You did not disappoint with an education stock pick. I guess if you do invest in education, you are making a great investment. A bit about Curro Holdings. I mean, they have grown quite massively in terms of the number of schools they have built. And I'm just wondering, is this trend going to continue? I suppose for myself, I'm considering the fact that they do tend to target a lot of the urban areas, and is sufficient land available for them to expand? What does the 5-year outlook look like?
So to give an idea, Curro, if we talk about the available market they have, they are less than 1% of the total schools, public schools or schools that are provided, educational institutions provided to the country. So in terms of scope of growth, they've got a significantly large scope to grow. They've got the capital to do it, and they're able to go about acquiring the assets. The key question is still going to remain, can they operate efficiently? And that is yet to be seen. And operating efficiently is not just a cost thing, it's also a results thing. Education, again, it's a difficult sector, and to have a for-profit education is quite difficult as well. So they have a lot of work to do in operational efficiency, affordability, and ensuring that they have results that match their price points.
Great. So if you've heard, ladies and gentlemen, we've got Curro Holdings appearing for the third time. Actually, once selected by Anthony Clark in 2022. And I think you and Anthony are either in the same investment club or WhatsApp group, because there's Afrimet as well that's showing up for the 5th time on our show, but Anthony picked it as well in 2023. And last but not least, Process featuring for the 3rd time. Thank you so much, Tamanga, for your time. Anthony, a very warm welcome to you. This is your 5th SA Stock Picks, a record for the program. Welcome. And we are interested in hearing your picks for today.
Yeah, good afternoon. Thanks for having me back for the 5th time. I think that's why I'm going grey. I've got 3 stocks to you today, a small cap, a mid-size business, and a slightly larger mid-cap. They're all 3 stocks I've covered for many, many years. All 3 have results coming out in the next couple of months. They are Argent Industrial with a market value of 1.1 billion rand, KAL Group, formerly Carp Agri, with a market value of 3 billion rand. And then lastly, Reunert, with a market value of 12.2 billion rand. Argent is a March year end. Results will be out sometime in the middle of May. KAL Group is a March interim. Again, results towards the middle to the end of May. And Reunert, again, a March interim. Results should be out at some point, again, end of May. So for us analysts, currently, it is a very busy reporting season. I will caveat that all three of these stocks have been selected in my top stocks of 2023. And I've owned Argent and KAL Group, or Carp Agri, for many, many years. So we'll start off with the smallest company, which is Argent Industrial. As I said, of a market value of just north of R1 billion. And that R1 billion was actually created this week. This is a share price that's been on a run for the last 3 years or so. It's moved up from R3.52 when I first spotted it in March 2019, and it's consistently made my targets. Why is this story elegant and simple? Because what they've done is they've seen the deterioration of this country and the fact that certain industries are no longer that viable, particularly in what I would call the metal bashing industry. So they've sold off low margin steel trading assets and recycled that money into a combination of material share buybacks. They've bought back nearly 40% of their shares in the last few years, and very successfully, they have bought businesses in the UK during Brexit and during COVID, when distressed companies were either looking to leave the UK because of Brexit or during COVID when they couldn't operate. And given that 75% of this company's profits are now derived from offshore operations, to hark on Simon's comment earlier, the devaluation of the rand against the dollar and the pound has seen significant benefits to the underlying earnings profitability of Argent Industrial. So as it stands right now, the stock is trading at 18.49. It's up just shy of 20% year to date. And despite the heady run in the share price, it's still trading on a price earnings ratio of 4.5 times. And on my forecast for March 2024 of 5 rand a share in earnings, that drops to 3.7 times. So it is still a cheap small cap, despite the share price having run extremely strongly in the last couple of years, showing you that private investors can still pick up bargains in the JSE, which are completely ignored by the wider institutional market for a variety of reasons. The company is still performing extremely well. I have no doubt that my 5 rand a share earnings target will be made. And the stock recently smashed through my 18 cents target year to date. I've now revised that to 22 rand. And even at 22 rand on a 5 rand earnings, and then looking forward 12 months, the stock remains very cheap. They still are doing share buybacks, and the company is still looking for offshore acquisitions. And I'm on public record as stating at some point, I believe that Argent Industrial will probably delist from the JSE and then relist on the London AIM market where the bulk of its profits are made. And we will still use South Africa as their low-cost manufacturing base to export products to the UK and Europe in the likes of security barriers, garden fences, gates, and other metal equipment. Their well-known brands are Expander, as an example, in this country, Caster and Ladder, but in the UK, they have a number of businesses in likes of safety doors, trolleys for collecting pick and pack in large online retailers, and fuel transporting businesses, particularly at the major airports, which have done extremely well as the flights have returned post-COVID. So Argent at 18.49 to me remains a buy, despite its very large run. Secondly, KAL Group, formerly Carp Agri, trading at 41.50 rand before I came online. Market value 3 billion rand. Current PE 6.5 times. Now, this is a retailer. Now, we all think that retailers are stocks that we know, like Mr. Price, ShopRite, Pick and Pay, amongst others. But Carp Agri over the last 10 years has completely transformed itself from being an agricultural business to a predominantly retail business with convenience store offerings, a very large footprint across the country, and latterly for the last 2.5 years in fuel stations, mainly on the major conurbations and the major highways, the N1, the N2, etc., etc. And as we all know, if you're traveling from Joburg to Durban or Joburg to Cape Town, you stop up at a fuel station, you want to load up your fuel, your partner wants something to eat, the children may want to go to the bathroom and buy a chocolate and a soft drink, and they certainly do not come at a cheap price at those locations. So it's a fairly captive market. Secondly, the agricultural market, which is 25% of the business, but about 15% of profits, remains very robust here in the Western Cape with good weather in the wheat, horticulture, and the fruit sector. And again, the depreciating rand has done the agricultural business here in the Western Cape big favors in terms of export of citrus, apples, pears, etc., etc. And Kaap Agri provides all the basics for farmers in those areas. So fertilizers, the netting, the poles, and of course, all the packaging materials needed to export those businesses. And as a small side tidbit, South Africa is now the second largest exporter of citrus in the world, only after Spain. We exported 130 million cartons last year of citrus. It's a very, very important business, and Kaap Agri is rapidly growing in that area as it is in the table grape market. So as a retailer with a PE of 6.5 historic and 5.5 forward to my September forecast of 7.25 rand, that compares extremely favorably with many other retailers which are trading in PEs in the high teens or even in the 20s. I checked earlier that Shoprite's on a 22, justifiably so. Its revenue base is 10 times higher than Kaap Agri. Kaap Agri's revenue last year was 22 billion rand, and it made a profit of 680 million rand, but it has a 2026 target of 1 billion rand. So it's a fast-growing business, and I think there are many retailers out there in the space which would love to have a consistent compound growth rate in earnings of 15% per annum, which is what KAL Group has had for the last 10 consecutive years. It even made money during COVID and during the worst drought in 100 years here in the Western Cape. So solid, reliable retailer, trading on a very affordable rating, and I think there is some re-rating potential in that stock. I have a target price of 54 rand. And lastly, moving into Reunert, a stock which has completely reinvented itself over the last few years under the leadership of Alan Dixon. Reunert, as we know, is predominantly known for its cabling business. We all know what's going on with Eskom in this country regarding the need for significant energy upgrades and reticulation infrastructure, particularly in overhead power lines and municipal upgrades. So Reunert is very well placed with its cabling business to benefit from Eskom's hopeful rejuvenation under the electricity minister. Secondly, nothing makes money like war and conflict. It has quite a sizable defense business and communication, which is doing very well, thank you, currently, with record order books as countries around the world are looking to upgrade their communication networks, particularly in conflict regions, and to be prepared for potential conflict. And then with inside Reunert as well, there's a very large growing renewable energy division targeting the medium-sized enterprise business. They do not want to do solar power for the residential or the small-scale user. They want to go from 500,000 kVA, 500 kVA to 30 megawatts. Year to date, the stock is up just under 11%. It earned 6 rand last year, puts the stock in a P of 11. I'm forecasting growth this year of about 14-15%, which brings the PE down to about 9.5. And for a company with a resilient order book in areas of the economy which seem fairly resilient, despite anything that's going on in the greater economy. Defense is, excuse the pun, defensive. Electricity has growth vectors. And renewable energy, as we all know, has a long tail ahead of it. So those are my three stocks: Argent, KAL Group, and Reunert.
Thank you very much, Anthony. I'm really happy to see the agri sector coming into the fore. And I suppose as far as Reunert is concerned, that answers a question from Lamu Dlamini, who was asking about Reunert. And maybe you could expand further on what are the prospects of renewable energy as a sector into the near future. You spoke about the expansion plans of Reunert, but do you see that as a sector that one should look at, along with stocks such as Montag Renewables, as indicated by Lamu Dlamini?
Yeah, there's no direct investment on the JSE targeting renewable energy. Inside certain companies, there are elements. For example, Mustec has battery solutions and solar power. Hudeco is moving in that area. Reunert is targeting the medium-sized enterprise business and the slightly larger consumer. So there isn't any direct play. So all companies that I've mentioned, Mustec, Hudeco, and Reunert, to a certain degree, have growing interests. The one where you want to play in is what I would call the business end, where they're taking a long-term strategic decision, and there's much less competitive landscape. I think all the panelists will be aware that during the major load-shedding elements of 2023, every man and his dog was importing solar panels and selling them off the back of the bucky. That market is completely saturated and margins are continuing to fall. Where in the more established medium-sized enterprises, there is a far more resilient area because the capital investment is far more significant than just importing solar panels by the container load. Regarding Montauk, that share price has completely collapsed in the last few months, a combination of very low international natural gas prices hitting record lows. But interestingly, Montauk is a renewable energy play, and I'm not going to get into the complexities of the D3 RIN pricing and US EPA standards. But simplistically, the market believes that with Trump potentially becoming the president in 2024 in the November election, he has an agenda towards fossil fuels, which might not be as kind to renewable energy providers like Montauk, and the share price is weakened on the back of a potential Trump election win. There's still great upside in Montauk because green energy is not going to go away, and presidents come and go. Green energy is here forever.
Thank you, Anthony. We just have time for one more question. I'm going to ask Petri to take this one. It's from Intrepid SA, who asks that I'm heavily invested in SSW, so Sibanye Stillwaters. Should I take the loss or hang in? You're on mute, Petri.
Right, there you go.
There you go.
I'm saying, yeah, thanks for the trick questions, guys. So Sibanye, I think, is a challenging one because I'm quite bullish on Sibanye in general. However, it seems though, and this is something that was happening a bit to Impala as well over the last couple of days, well, we saw the gold stocks really charge up the page. Anglos, Goldfields, DRD, Pan African, all of them really running very hard. All the platinum exposed guys were coming under an enormous amount of pressure. It felt over the last few days as if there was a bit of forced selling almost in the, I mean, if you look at something like Impala 3 days ago, on the 4th, when was that? On Monday. The stock was up and then it ended up the day down something like 7%, and that selling continued throughout the course of yesterday. And it really just felt as if there was big institutional funds unloading platinum. Or any platinum exposure that they had. So I felt a little bit like we had this rotation out of platinum into gold. So I would be hesitant to take the loss on Sibanye. I think that Sibanye still does offer a little bit of value. I mean, if you look at something like Sibanye, the last time the price was down here, okay, was quite recently, I think in November last year, but prior to that was in 2020. So we're like at 4-year low prices essentially. So I do think that it's potentially worth hanging on. It depends, obviously, the size of your position and how deep your loss is. But I wouldn't be in too much of a rush to sell it now. I think that there's still quite a bit of upside to be had here. I think, markets, much like the South African mood in general, can be very, very extreme in the sentiment. So we can go from extremely negative to extremely positive, and there's almost as if there's no in between, right? So I think that that's the situation we're facing currently with Sibanye. I know Neil Froneman goes from most hated to most loved to most hated to most loved to most hated CEO in the sector. And I think at this stage, the stock is very out of favor, but I do think in the long run, Sibanye is going to be fine.
Thank you very much, Petri. We just have one last question that sneaked in. Simon, this one is for you. Any thoughts on Pick and Pay? Is it catching a falling knife, as they ask?
Yes, in a short answer. I was holding some Pick and Pay. I've been picking it up. I knew there would be an update coming. I thought there might be a rights issue, but the update was way worse than I thought. And I thought a rights issue top end would be 4 billion, but now they're doing a 4 billion rights issue, and they're going to list Boxer to raise cash. Their debt doubled to over 7 billion. It's a mess. I mean, if anyone can turn it around, Sean Summers is the man who can do it. but there are incredibly thin margins in grocery retail. What we're certainly seeing is that things can go very wrong very quickly. Just from the year end to the update we got, things that absolutely deteriorated markedly. I would be very cautious. I was quite interested in it, but not so much now. Then you look at the Shoprite results that came out yesterday, and Shoprite just continues to gain market share. Shoprite's spending some 8 billion rand on capex this year, next 6 months rather, whereas Pick n Pay is sitting on market cap of around 9 billion. It's just been staggering what's happened over the last 20 years. I would want to see some stabilizing of the price and stabilizing of the business before I'd want to get back into Pick n Pay.
Thank you very much, Simon. It sounds like you've just snuck in a fourth stock pick there. But never mind. Thank you to our panel members, Simon, Tamanga, Petri, and Anthony, for your selections and valuable insights. There were some regulars that we saw there and some new stocks to ponder on. And I'm sure you as the audience have learned something from today. The prices for today's picks are in the comments box on our YouTube site, but they also will be displayed shortly. To our audience, thank you so much for listening and sending your questions through. We have 14 sessions you can watch on our JSE YouTube channel. So please go there at your leisure just to gain an understanding of what our experts tend to look for in a stock before selecting it. And a reminder to you all that the views shared in this program are not those of the JSE and should not in any way be seen as the issuing of financial advice by a panel. We recommend that you consult your broker or financial advisor to help inform your financial decision. That's all the time we have for today. Have a great day further. Thank you very much. My name is Voyoli, and we'll see you at the next SA Stock Picks powered by the JSE.